Welcome, ladies and gentlemen, to Commodity TV and to our new, virtual online interview series. We want to get an update today from Consolidated Uranium, and I should say also from ISOEnergy, with Phil Williams, the CEO from Consolidated, because the two companies are merging together. So that's one of the big highlights in the uranium market the last days. And welcome and good morning, Phil. How are you?
I'm well. Good morning. Nice to see you. Nice to speak to you again.
Yeah, great to see you again. And I must say, I'm a shareholder in both companies, Consolidated and ISOEnergy, but we want to talk now from the perspective of Consolidated in that sense. We were always very positive on uranium, and my feeling is you guys are creating the next, I would say, uranium champion with that merger. How did you come on that? I mean, that's outstanding.
Yeah, look, and that's really been the plan. And Joachim, we've been talking for several years now since we started Consolidated, which is only 3 years ago. And really, that's been the plan. The plan is go around the world, build out the biggest and best portfolio of assets in the top tier jurisdictions. And clearly, this merger with ISO elevates our game yet again. The Hurricane project, the resource there is outstanding, one of the best projects in the world. So. Yeah, we couldn't be more happy to be joining forces with ISO on this merger.
hmm I mean, we can talk in a second about uranium markets. I think they have quite rare be better than this year and the last, let's say, preparing 2 years, I would say. But where do you see the benefits for the shareholders of both companies, aside that you are creating really a large company? How does it look like, let's say, financially wise, project wise? Can you give us a bit more light into that, please?
Sure. Yeah, look, I think the benefits are multifaceted. So the combination of the projects really gives us a pipeline of development assets. And the goal of the company is to become a multi-asset, multi-jurisdiction producer, again, in the better jurisdictions for uranium in the world, namely Canada, the United States, and Australia. That's our real focus. So the projects really come together very nicely. We've got advanced near-term production in Utah. Then you've got the Hurricane asset, which will be a development asset. We have an amazing exploration portfolio and some other development assets, which we think in the bigger company will have a really good chance of moving ahead. Very well-rounded portfolio. I think another benefit that's going to be seen is just being a bigger company in the space. Where the pro forma market cap of this company is 750, maybe almost 800 million, depending on where the share prices are, and that really puts us in the top 10 of the bigger uranium companies in the world. It's going to attract a lot more investor interest, both institutional investors, retail investors, and the uranium ETFs. It's also going to make us more attractive to utilities. So utilities around the world are looking for companies, bigger companies that can develop projects again in those better jurisdictions. And so I think I think the benefits are enormous. And then the team, right? So we have very complementary teams. The ISO team is very experienced in the Athabasca Basin in exploration. We've got more operational expertise. The teams are coming together. The backing of the shareholders together. So the three sort of cornerstone investors in the financing we announced are NextGen, Energy Fuels, Mega Uranium. We also had industry leading investors, Sachem Cove, come in. I think the benefits are multitude and on several different levels.
Absolutely. Yeah, you just said it already with the financing. They are looking for on the best efforts basis for 21 million Canadian dollars. I could imagine that they easily could raise maybe more.
Well, we announced that we upsized the deal to 35 million, and so yes, we are taking a bit more money in, and that financing will close in a couple of weeks. Transaction
Yeah.
will close in early December, and away we go.
Okay, super. What would be then the final cash balance of the merged company? Can you say that already? Let's assume the 35 million will come in.
Yeah, look, it'll be over $40 million combined with the cash that we have on hand. There's transaction costs around getting the deal across the line, but we'll have over $40 million, and that easily funds our budget for the next 12-18 months on all the various projects.
So also for aggressive exploration, I could imagine.
Absolutely.
Okay, super. So the deal should close in December this year, which would be great. I think that is like next 3 months is roughly saying for the timeline. That's fantastic. Yeah, we could talk about exploration now, I think, for an hour easily because you have so many fantastic projects. But what made me, for example, to invest also in Consolidated was that you have 4 mines in the US, which I think you really can go to, or 3 mines, you can go really fast on the production path, right?
Well, 100%. And those mines, okay, they're past producing mines. They were in
Hmm.
production in that bull market of '06, '07, '08, shut down in '08 and '09 due to lower prices. They're sitting on care and maintenance, very easy to open up again. They're fully permitted to go back into production. And so we're
Hmm.
working them right now. We just finished a drill program at the Tony M mine, and we're working on all the various items that we need to be production ready, so we can hit the button and start mining and sending ore to the White Mesa mill, within 12 months.
Super. So that would be something where you can use them with White Mesa as a processing facility because you have the deal with Energy Fuse, right?
That's right. So we originally purchased the projects from Energy Fuels, and as part of
Hmm.
that transaction, we secured a toll milling agreement at White Mesa. We're the only company that has a guaranteed access to the mill under that toll milling agreement. No other company, uranium developer, has a toll milling agreement with Energy Fuels, and more than anything, we're partners with Energy Fuels. They're looking at opening that mill up for new ore, developing some of their own mines and our mines, and we'll all ship ore to that mill at the same time. And let's not forget, they're a big shareholder of our company. So right now they own
Hmm.
16% of CUR. Post the transaction, they'll own 5%. And as part of the financing, they're maintaining their interest, that 5% interest in the company, which I think is a huge validation of the strategy, the deal that we've done, and their commitment to working with us going forward.
Okay, super. Stupid question, but can you already say how much money you maybe need roughly, really like a just a guess, to really start the first, let's say, yeah, 2 mines to really get it going? Because my feeling is that we are getting in such a stress the next 12 to 18 months is at the uranium markets, that yeah, more and more nuclear power plants, especially in China, are opened up, and the demand is there, and the market is in a deficit. So I could imagine that we easily move to 80, maybe $100 per pound, and that would be something, yeah, of really high interest for us shareholders then, because you would make real money.
Yeah, look, and this is one of the great qualities to those assets. So these, because they were in production in the past, all of the capex, the big capex, is really behind them. We've done the math. Over $100 million was spent developing these mines in the past. For example, at Tony M, all of the surface infrastructure is in place. $15 million was spent by Denison. The underground development, 18 miles of underground development is there. Spent $50 million by Consumers Power on that. We don't have to spend that money. So if I'm going to give you a kind of arm wave around what it's going to cost to put them into production, it's very small capex. I would say around $10 million US to turn all 3 mines back on. And a lot of that is really just working capital. We're going to contract mine these projects. It's not for, hey, we need to build a shaft, or we need to or sink a shaft, or we need to build surface infrastructure. No, it's just about hiring the contract miners, bringing them in, opening the portals, and getting going. So I think that's one of the lowest capex costs for any of the restart miners out there in the uranium sector today.
Yeah, that sounds really outstanding. So are those 10 million already inside the 35 million you're raising?
Well, it's not earmarked as such, but yes, we post closing, we'll have that money on our balance sheet if that's the direction we want to go. And look, it's going to be dependent on some other factors, including uranium price. I'm firmly in your camp. It's going higher, and it's going to stay higher for longer. But also, there's the timing of the restart of the White Mesa mill. It's not currently operational, but I do believe it's gonna move back towards turning on within 12 months, and we'll be ready.
Okay,
And
super.
we'll be ready to deliver ore from the outset.
Super. So we could say by 2025, definitely things are moving in production.
If the uranium price continues to go in the direction
Oh,
that
it
we think
stays.
it
Yeah.
is, then I would say that's a very solid bet.
Wow, love to hear that because it would be also great for the share price. Fantastic. Can you also say something maybe from your view to the Hurricane deposit? I think it is the world's highest grade deposit by now, or one of the highest grades. I think it really let's say around the top three in the world, and it has already a favorable resource. So what would be the plan there? Because I could imagine this is something you want to bring in production too, right? By the end of the decade.
Absolutely. And really is a standout ore body. It is the highest
Yeah.
grade indicated resource in the world. It's so much higher grade than the average grade around the world that it's almost hard to comprehend. What's really fascinating about it when you go to the project, and we went this summer, is how small the footprint is. You can walk across the ore body in minutes versus go down to Tony M. It took 10 minutes to drive from the portal to the drill pad when we were down there not too long ago. So in that small amount of area is a huge amount of value. That 50 million pound resource all sits within a small envelope. So the plan here is to continue to see if we can grow the resource, and we're going to do some work on that front, but also understand how to mine it, and what mining looks like from an economic basis. And we're going to put out a lot more information about our plans in evaluating it. What's very interesting as well is it sits 40 kilometers away from the McLean Lake Mill. There's tremendous infrastructure. It's on the eastern side of the Athabasca Basin. So it really does have all of the attributes that you would want for a development project in the Athabasca Basin. And so we're going to, it's the flagship asset of the pro forma company. It's going to get the lion's share of the attention.
Okay, super. It looks to me a little bit like that. I mean, you are building really a US uranium champion, I would call it, aside of, for example, Uranium Energy Corporation. Yeah, because when I look at your Virginia site here with Coles Hill, you have 133 million pounds indicated and 30 million pounds in the inferred category. I mean, you can easily make a mine out of that, right?
Yeah, well, that project is a tier one asset, which has a historical impediment to development. Virginia currently has a moratorium on uranium mining. That was put in place in the 80s. We picked up the asset
Okay.
because technically it's very strong. Obviously, it's got a tremendous resource. It's the largest project in the US by an order of magnitude. What we believe is that the US is a fantastic jurisdiction for mining uranium.
And they need it.
They need it. And if
Hmm.
you saw today, there was a news article talking about potential sanctions, not US sanctioning Russian fuel, but the other way around. Russia sanctioning sending uranium into the US. That if that happens, the demand for domestic sources goes exponentially, and this project has a very good chance of moving ahead. We're working extremely hard in the background to get political support both on the local and the state level for the project. It's inconceivable to me that in the future that we're talking about, where nuclear power is growing dramatically, we're going to double the reactor fleet around the world by 2050, 2060, and the US needs secure, safe domestic sources of supply, that this project isn't part of the solution. I think it's going to be a big part of the solution, and it's tremendous option value for our company. We unlock that, and shareholders should benefit tremendously.
Absolutely. So for the US, also for the Canadian stuff, that's all clean and clear. Maybe you can say some words to the longer term strategy in Queensland and South Australia, because I could imagine that is something like a future kind for the company, right?
Yeah, look, and we think that Australia is an important part of this company going forward, and we've really tried to articulate to the market the strategy of being in the three best uranium mining jurisdictions in the world: Canada, the U.S., and Australia. There's only one other company in the uranium space that's focused on those three countries, and that's Cameco. And so we think we think that's a great strategy. Queensland and South Australia, those projects are very interesting, and we haven't spent a lot of time doing work on them. We're going to increase our focus on them as we go forward, and potentially other assets in Australia. You've watched us over the last 3 years, Jochen. We are busy, transaction oriented team. We certainly have our sights set on getting bigger in Australia, and so I think you really want to watch that space. And then the overlay in terms of politics in the country, every day we're seeing new information come out, not just
Mm.
supporting uranium mining, but potentially nuclear power in Australia. And if we see that continue, again, we think that only just adds another check mark to the box of why Australia is a great place to be looking for and developing uranium projects.
Yeah, absolutely. Okay, last but not least, I love to hear your market view on uranium.
Look, I think it's pretty simple. Today, you cannot buy uranium. You just cannot get your hands on it on the spot market. On the long-term basis, we're seeing utilities increasingly contract. There was a big spike in contracted volume this year, and because they recognize the future, they want to secure long-term sources of supply for years to come. Because everyone's seen, we just talked about a second ago, the number of reactors is going to grow dramatically in the coming decades. Nuclear power is getting all the acceptance that we all knew that it should. Even Bono came out the other day in favor of nuclear power and has just written a song which references it. Like, did we ever think that we'd be in a world where you two would be supporting nuclear power? But they are. So what does that mean for the market? It means prices are going to go higher and they're going to stay there. I think we're going to see a structural shift in the underlying base price. There's going to be volatility around that price, and we've seen it historically. We could get some very significant price spikes, but what we need for our business is sustained higher prices, and I think we're going to get that. I think we're all going to do very well.
Absolutely. I see it the same way, definitely. And Consolidated and ISOEnergy together should participate really well on that.
Absolutely. Well,
That's for sure.
that's our tagline. We're building a company for this uranium cycle.
Mm. Yeah, yeah. Now this cycle will last for the next 20, 30 years. That's for sure. Yeah, fantastic. Super. Maybe one question, I don't know if you know that. What are, let's say, the last contracting prices you have heard of? Have you heard about something? Because I could not imagine that somebody gives his uranium now away for 80, $85 within, let's say, the next 3 to 5 years delivery. I doubt it.
Yeah, look, and all the contracts, the specific details of the contracts are often kept secret for various
Mm,
reasons. The long-term price, I believe, is in the mid 60s now, but I don't know that there's a lot of material being transacted at that price. I think what people are increasingly looking for is contracts with leverage to the price. So they're looking for market-related prices rather than
mhm,
fixed prices. So I don't think you're going to see anybody sign a contract that's going to say, okay, all of my production is at price X. I
mhm.
want to participate in the upside. And I think that's what investors want. I mean, you've been around the gold business.
Of course.
If I
Yeah.
told you I'm hedging all my gold production, nobody would buy the stock. But
Mm,
if you but at the same time, having contracts so you have counterparties to purchase your product, I guess makes sense. But you want to
mhm,
preserve the upside. So it's really market related contracts. I think that we're seeing with floors and ceilings in some cases.
mhm.
We've got some other ideas. I don't want to completely give away our secret sauce, but
Yeah.
Tim from ISO, who you know,
Mhm.
he worked in Cameco selling uranium, marketing uranium around the world for a long time. And I think we might surprise people with some of the moves that we're going to make on the nuclear fuel side. But that's a story for another day.
Okay, super. Phil, thank you very much. Really pleasure talking to you. Again, congratulations, yeah, for the merger and doing that. Look forward here to interview you also in the future as the new CEO of the merged company. And yeah, wish you all the best. And I would say $100 per pound uranium at Christmas. We would be all happy.
Yeah, that would be a nice present
Yeah,
for under the tree.
absolutely. Super. Thank you very much. Keep it going and keep us posted.
Will do. Nice talking to you.
Thank you very much. Nice talking to you. Yeah, ladies and gentlemen, that was Phil Williams, the CEO of Consolidated Uranium, and he's also the designated CEO of the new merged company of ISOEnergy and Consolidated Uranium. Yeah, you heard it. This will be the next champion in the uranium space. A fantastic combination of projects. Yeah, in Argentina, in Australia, in Canada, and especially also in the US. They will have 3 mines which they will switch on within the next 12 to 15 months. months. And also they have that contract with the White Mesa mill with Energy Fuels for the processing. That is fantastic. And what I really like is the fact they will have enough money to really go full throttle, because they upsized just the private placement to $35 million. And also it only costs approximately $10 million to bring those 3 mines in the US back into production. So that's exactly what we want. That is fantastic. The stock price is at a favorable entry level. I bought myself 2 weeks ago, also because I switched some assets, and that is fantastic. I'm here in for the long term. You really should consider Consolidated Uranium IsoEnergy. That is fantastic to participate in the uranium market. Thanks for watching us, and bye bye from Switzerland.